Hello and welcome everyone for another weekly market commentary here from StashAway. I have with me again our Chief Investment Officer, Freddy.
Hi there.
We're happy to have you guys all listening again today. A couple of things before we get started. If you have any questions today, over the weekend, whenever you listen to this or watch us today, please feel free to ask them down in the comment box. It could be on Facebook or on YouTube, wherever you're deciding to listen to this. On top of that, I have a couple announcements to make in terms of the next couple events, which will be in Singapore. We have on June 26th, we have Investing for Women. That's at 7 p.m. and you can find that on stashaway.sg/events. You can scroll down all the way to the bottom. You find our upcoming events. You can sign up for that as well there. And then this Saturday, actually, we have the first Saturday event in Malaysia, which is Financial Planning Basics. It is at our office in Equatorial Plaza, and that's on Saturday. You can find that at stashaway.my/events. So we hope to see as many as possible of you all out there. And I think both are really interesting topics in general. For today, I think we have a couple of things to discuss. The markets have been reacting quite well the early days of the week. Maybe you can kind of walk us through what that is, and then also because of that, actually, is the topics we're going to talk about, right? There's some trade war updates. We had the federal central banks in Europe, the US, in Asia talk as well, right? So maybe we start with that. We start with the update on the trade war, since last week it was like, oh, they might not even meet at all. Now everything is a little bit reversed, right?
Now they're meeting again.
Exactly.
Right. Now, so as we know, yesterday, Trump tweeted that he's going to meet Xi at the sideline of G20 meetings, and President Xi from China also confirms that. Yeah. So market take that as a positive. So there was a big move. It's bigger than what the ECB, the European Central Bank, has done. Because as you know, just a couple hours before that news hit the wire, Mario Draghi, the outgoing ECB president, has pledged to support the economy and that they will stand ready when necessary. So that was the first positive news. But it turns out that Trump is still has a bigger impact on markets than any central bankers.
Yeah, more so.
So that's the irony. So that's the answer to your question on the market moves and the trade war. Really nothing of substance other than
we still don't really know what's going to happen exactly.
Yeah, nobody knows what's going to happen. This thing will just come and go as usual, as we always maintained. Yeah. So StashAway is not really reacting to this.
No, because like you said, right? One day they talk about this, one day they talk about this, but the long-term economic outlook is still not changed, right?
Yes.
So that's with that. So what about then locally, right? Like I think central banks are also being looking more like dour in a way, in terms of like, want to support the economy, right? Mm-hmm. Is that what you're seeing from like maybe Australia,
Well, in the talking about non-US first, we know that most countries have a common trend where growth has slowed.
Yeah.
Slow is not the same as negative, but has slowed from a high bar. And at the same time, inflation is low. So it actually gives the central banks in this region a lot of room to actually ease policies further. So Malaysia already is on that. I think New Zealand, and the Reserve Bank Australia also joined in recently, signaling that more likely in the future the actions is going to be rate cuts rather than the other way. They haven't done anything, but the jawboning is really helping to cushion the markets. The Fed has said the same. We're going to be ready to be there for the markets when needed, right? So it's just a lot of forward-looking statement with not a lot of actions yet.
Yes. No, but the markets are pricing that the safety of those words, right? So to speak, right?
Yeah.
That they would step in.
Yes. And well, tonight's a litmus test, because there's a lot of rate cut being priced for the U.S. Federal Reserve, and today and tomorrow we'll have the Fed meetings, right? So with so much being expected already for the Fed to act, it's going to be very tough for the Fed to deliver anytime soon. So there's a lot of room for sort of disappointments. Yes. So in the near term, we actually have more risky events than in the long term.
Yeah. No, I think this is a good. It's a good way to summarize those things up, right? So if we talk about one of the topics that we always get with customers, right, and like during the seminars as well, right, more so obviously in end of 2017, early 2018, with cryptocurrencies, right, getting really high, making up large parts of portfolios of clients. We see it also at companies that give out a lot of stock options, right? So what I want to get to is actually talk a little bit about diversification, how much you should have in any one thing, right? So with Facebook now joining in, cryptos have been working better again lately this year for sure, right? And so people are coming up again, right? So what is your take on like a certain asset class exposure, right? Within, like, equities are one, bonds, or, we can talk about your personal real estate holdings, right? Company stock. What is your guidelines maybe for people to say, I wouldn't go more than this? If it goes above that, maybe sell, diversify again through other holdings. Right?
Well, I think the key thing is to rebalance it at certain times.
Yeah.
So if you have a 5% allocation to cryptocurrencies 2 years ago, and it's now gone up 10x hypothetically, and now it's 50% of the portfolio, then something is wrong. You're becoming over-concentrated. So I would just say probably review it periodically and rebalance your portfolio back to your original plan. Right, that unless your plan change, but that's what you should do, and review periodically. And also sometimes it's just a lot of rumor versus facts sort of situation. So in the case of Libra, which is the Facebook coin, is have very different intentions than the usual cryptocurrencies. It's actually backed by fiat money and a bunch of reserve currencies, and with a bit of income potential, but its biggest value is derived from the utility of using it on Facebook's platform, which is an unknown and as to how and when it will progress. So it's just very speculative right now, but actually it's a product not designed for speculations. A lot of people should really think twice about just buying any cryptocurrencies into this sort of news, because the intention of this coin, this initiative by Facebook, is entirely different. It's designed for low volatility, it's designed for utility meaning to be used on platforms like Facebook, maybe even with several other partners, right? So details are yet to be released, and let's not rush into a speculative mode. Just on that.
No, exactly. No, I think and then what I wanted to talk about is the diversification part, because we always get this, right? And people, over a year or two, you forget about, oh, I invested in this, or my company stock, you get more as a bonus again, right? It goes up in value, all of a sudden the 5 or 10% that you wanted it to be is now 50 of your net worth, and then it becomes dangerous in terms of exposure, right? So I think you made it quite clear on what to do, revisit it, look at those numbers at least periodically, right? Again, thank you, Freddy, for having you here again. I want to thank you, everyone, for listening again this week. We are back next week, so hopefully we'll all see you again then soon. And otherwise, I would like to see everyone at the events as well, right?
Yeah.
So have a wonderful day.
Ciao.
Bye-bye.